What do you think it means for gold moving forward?
Well, it's bullish. So what that does is it lowers the opportunity cost of holding a no-yield asset like gold, and so people are getting into it. And it's had a great run. It's up 20+% year to date. It's one of the outperforming commodities that we cover at Panmure. So it's an interesting shift.
Okay, so where to from here? If it's bullish, could we see maybe testing 2.6, 2.7, 2.8 even?
Pick a number. It's gone nuts at the moment. Based on rates alone, I think we'll probably just see the price stabilise. And it's based on just how gold performs in rate cut cycles. So if you think of the last 20, 25 years, the dot-com fade in 2001, GFC in 2008, and tariff war in 2019, the price basically stabilised when the rate cut cycle began. So we're probably expecting stability in the price on that theme alone. But there's a lot of other drivers in play.
So let's go through them. The USD is also at its lowest level in 13 months. Is that also a catalyst for higher gold moving forward?
Absolutely. It's a US dollar asset, so it just makes it incrementally cheaper. So people feel comfortable buying a bit more on that basis too.
What else? What else is driving the market?
Well, the dominant driver through the cycle are changes in US rates. So the cash rate policy reporting through to bond yields and real rates. But there's been some really chunky bullish drivers that have played out, like war. So we've got lots of conflicts happening, Russia, Ukraine, Israel versus Hamas and Hezbollah, and we've got China-Taiwan confrontation. So these things we've noticed has actually pushed the price up in steps in the last 12 to 18 months. So that can't be ignored. But they're also really difficult to quantify because we're not really sure how the market perceives those risks.
And how would you say that traders are responding to the use of gold as that traditional safe haven asset in, I guess, comparison to other safe havens like treasuries, for example, even the USD? Some might even say Bitcoin, for example, as a safe haven. I mean, it doesn't come up all the time, but it's still being used in portfolios. So how is gold being treated as an asset class right now? Well,
the investors and clients that we speak to always have a little bit of gold in their portfolio, and some of the braver ones also have other things like Bitcoin in their portfolio. So they try to keep a mix going. They'd be quite excited about this rate structure shift led by the Fed because that just makes gold a little bit more appealing. So they may stock up a little bit over the next, say, 6 to 12 months. So there's those strategies coming, and that's the feedback we're getting at the moment. It's an appealing asset to buy.
So what are the other assets that we should be watching through this coming easing cycle? Is there anything else on your radar?
Oh, great question. I thought this was gold only, but lots of other commodities are actually responding to it. Most of the commodities traded globally are traded in US dollars. And the entire industrial metals complex is starting to report a recovery in prices. They've been hammered for about 3 or 4 months, come off 10, 30%. The superstar asset that everyone's following is copper. So that's lifted, but in fact all of the base metals have lifted in response to this theme alone. So they're all pricing in lower rates at the moment, not just gold.
Okay, what do you think copper is responding to as well? Traditionally it's been seen as Dr. Copper, the barometer of global economic sentiment, global economic health. Where has copper come from and where is it going?
Well, the Dr. Copper theme implies that when things improve in terms of economic growth, particularly in a major economy like the US, it's going to report some sort of recovery as well because it feeds into the power gen systems of that massive economy. But there's some additional sort of appealing features to copper. We're trying to green the planet, improve the way we do things in terms of power generation and distribution, electrify transport systems, decarbonise, and copper is considered to be a critical input for that. So that's another overlay bullish theme that people are sort of drawn to on that market. So that's all kicking the price along too.
One of the other major factors that determines a lot of where the industrial metal complex goes is the outlook for China. Lots of demand concerns emanating from the economy right now, given the conversation and lack of stimulus that we've seen from policymakers. Is that a concern you share?
Yes, so one of the big challenges for me as a commodity analyst is trying to balance up the bullishness of rates coming down in the US against the fact that China's economy has been struggling for probably 2 or 3 years now.
Right.
Why is China important to commodity world? Because they consume 40 to 70% of everything, and they take up half the world's copper supply. And now they're struggling. So what do you do? And so I'm sort of trying to balance those elements up across the modelling of all our markets. And without these rate cuts, China was going to be a dominant drag on price performance. So this is a nice offset for the price performance, and hopefully we'll actually see some sort of trend lift coming out of it, a net outcome.